There's a high percentage of forex traders that do believe that trading the breakout strategy is not effective when in reality it's actually effective. Let me explain why. Us trader, we trade two trends, the uptrend and the downtrend, right? So I'm gonna give you guys an example. Whenever price is heading to the upside, right, the only way to price to continue up, we need to break above the previous high, which is also known as the resistance, right? So once price action does break above that previous high, right there is called a breakout, right? Same thing whenever we're trading the downtrend. To price to continue to the downside, we need to break under support so that we can continue the trend back into the downside, right? So right there, that is called the breakout, right? It's very simple. Now, many people do fail with the breakout strategy because they don't ask themselves two questions. When should I trade the breakout and how should I trade the breakout? So in this video, I'm going to give you guys my strategy that I've been using for this past year, and it's the same exact strategy that I do trade every single day with my members in the VIP group, right? So in this video, we're going to split this part by two. This video, I'm going to give you guys the information that you guys need to know about my breakout strategy. And then in the second video, I'm going to give you guys exactly step by step on how I mark up my charts and how do I take the trades. So let's get right into the charts. So I wrote down the information / the steps that you guys need to know exactly how this strategy work with. These steps down over here is the steps that you guys are going to be using every single day whenever you guys are trading, right? So let's get right into this information. The first question is, with what pair did this trading strategy work the best with? As you guys can see, it works the best with GBP, JPY, also known as GJ. Now, this strategy also worked with the other pairs that I do trade, which is over here. As you guys can see, it is indices and gold. Now, the only difference is that I have a different trading style with it, right? So I'm also going to create another video explaining to you guys exactly how I trade the indices and how I trade the gold. But for now, let's focus with GBP, JPY. The second question is, with what trading session did this strategy work the best with? As you guys can see, it works the best with the London session, sometimes the New York session. Now, I wouldn't recommend to trade it during the New York session because during the New York session, the volatility with GBP, JPY slowly starts dying, and it has the best volatility during the London session, again, because GJ is a London session pair and not a New York session pair. Now, let's go down into the steps. Step one, this is what you guys are going to do every single day, right? Every single day, you guys are going to do your top-down analysis from the daily time frame, from the 4-hour to the 1 hour, 30, 15, and to the 5-minute time frame. When are you guys going to do your top-down analysis? You guys are going to do your top-down analysis from 2 a.m., right? Not before 2 a.m. or not after 2 a.m. During the 2 a.m. Now, also, you guys are not going to trade this at 2 a.m. You guys want to trade this during the London session open. At least give it a couple of 10 or 15 minutes when the market opens, right? Which is at 3 a.m. And then whenever you guys are doing your top-down analysis, your job is to identify the trend. Is the trend heading to the upside or is the trend heading to the downside? Step two, you guys are going to do this every single time. You guys are going to mark up your support and resistance for every single time frame. Now, I'm not saying to mark up support and resistance from the past, from the years, from the week. I'm saying mark up your current support and resistance, right? The third step is look for your high probability and high risk support and resistance from the 15-minute time frame to the 5-minute time frame, which I'm going to show you guys exactly what does that mean. And then the fourth step, these are the only 3 time frames that you guys are going to be trading with: the 30-minute, the 15 minutes, and the 5-minute time frame. And then the last step is you're going to look for your entry at the 5-minute candle close. And then how you guys are going to enter is always wait for the pullback, and then you guys are going to enter under a previous 5-minute candle wick low, which I'm also going to show you guys exactly how does that work with, right? And also, this strategy works with sell stops and buy stops. You guys are not going to enter a market execution. All you guys are going to do is set up a buy stop and a sell stop. So let's get right into the other part. So first, we're going to talk about candle patterns and market pattern. This over here is something that is very important because this is exactly how you guys are going to enter the trades, right? So make sure you guys pay very close attention over here. So us trader, we trade two trends. We trade the downtrend and we also trade the uptrend, right? So this is something that you guys are gonna see every single time during the pre-London session, right? So this over here is called the range. So us trader, whenever we see something like this, our job is to simply be patient and just wait for the breakout, either the break to the upside or the break to the downside, right? So over here, let's give you an example of the downtrend, right? So for us to continue the trend to the downside or to continue selling, we need to see a candle break under this area of support over here, right? So again, in the second part, I'm going to show you guys exactly how to mark up the support and resistance, how to mark up, your high risk and high probability support and resistance, which also plays a big part of this part over here, right? So let's give you guys an example first. So for us to continue the trend, right, we need to see a candle closure under this area of support, right? So this over here is step 5. Wait for the 5-minute candle to close, right? So once we do get a 5-minute candle close, this over here is the 3 a.m. candle, right? Again, we don't trade before the 3 a.m. or we don't trade during the 3 a.m. At least give it at least 5-minute candle, 5 to 10 minutes for the candle to actually close under this area, right? So once we do get a candle close under this area of support, the second step is wait for the pullback, right? Which is right over here. Once we get a 5-minute candle close, we wait for the pullback. So once we get the pullback, there's something that you guys need to pay very close attention, which is the wick. So let's write the wicks over here. All right. So once we do get the 5-minute candle closing under this area of support and we do get a 5-minute candle to pull back, right, where are we going to enter this trade? We're going to enter this trade under this low wick over here, under this previous 5-minute candle wick over here. We're not going to enter off this candle over here. We're going to enter off this other previous candle wick over here, which is most likely like this. So we're going to enter right over here, at least give it like a 2-pip gap over here, and then we're going to aim always for a 1 and 3. Now, me personally, I always do a 30-pip stop loss. You guys can do whatever stop loss you want. You guys can do it above the range over here, but me, I like doing it a 30-pip. So I usually do a 30-pip stop loss, and I always aim for a 1 and 3 risk to reward, which is most likely going to be 100 pips, right? So once we do get those confirmation right over here, most likely the next candle is going to activate the trade, and from there on is going to continue the trend to the downside, right? Now, same thing, whenever we're heading to the upside, we want to wait for a 5-minute bullish candle to close above this area of resistance. We want to wait for a pullback candle to come and retest it, and then where we're going to enter, we're going to enter above this previous wick candle over here to continue the trend to the upside, right? Now, there's something that I want to talk about because this is where most likely most people failed with, right? So let me just delete all of this. So let's say that we do get a break under this area over here and we do get a 5-minute candle over here. If this next 5-minute candle starts pushing to the upside, right, and we're trading back into the range, this is where no longer the sell is valid, right? What are we going to be waiting for? Now we're going to be waiting for this other 5-minute candle over here to break under, right? So if price action starts breaking back into the range and starts, keep trading in the range, this lows over here is no longer valid because again, price can just simply touch it over here and then push back into the upside. There's sometimes that price action does activate the trade and keep pushing to the downside, but it's more likely high risk, and obviously our job as a trader is to protect our capital, right? So most likely what I always do is draw another support under this candle over here and just simply wait for this candle to break under and do the same exact step I did over here, but in the new support over here. Same thing whenever it's bullish. If price action starts breaking to a downside, just create another resistance, and from there just wait for that resistance to break, right? So that is something that most people do fail because again, they're not patient enough and they just simply want to get into the trade, when in reality our job is to be very patient and wait for the trade to come to us and not us create something when there's nothing, right? So that's the patterns that you guys need to focus on, right? And then let me see if there's something else that you guys need to know about. All right, so moving forward, we're now going to talk about the 5 steps that you guys can do every single day whenever you guys are trading, which is look for your support and resistance, look for your high risk and your high probability support and resistance, and also look for your setup. So the trade example that I'm going to give you guys is a trade that we took on Monday or on Tuesday with the VIP member, which I'm going to show you guys right now. So as you guys can see, this was the trade that we took on Tuesday. Again, this was the first trade that we took. It was a 100 pip trade and it was also a 3% trade. Keep this in mind. This was also called as a sell stop, right? The next day we took another trade, which was a 1% trade. This was called as a sell stop. This over here was a risky trade, right? And then on Friday, this was yesterday, we took another risky trade that ended up playing out for 50 pips, also a 2% trade. So I'm going to give you guys the example that we took on Monday. So step 1, the first thing that I did was a top-down analysis, right? This is something you guys are going to do every single day. So let's say that you guys marked up a chart on Tuesday, right? Every single day that you guys are marking up, you guys got to make sure to delete and restart because your analysis on Tuesday is not going to be the same analysis for Wednesday, right? So make sure to always delete your chart and start clean. So the first thing first that I did notice on Tuesday was the 2 previous candle closure, right? So I noticed Friday candle and I noticed Monday candle. On Friday candle, I did notice that price action did reject these zones over here, which this is a very strong area of support, which as you guys can see, price has simply just been bouncing off and not breaking under. So this is a major support of the daily time frame. Another thing that I did notice was that on Monday candle, right, we broke above this highs over here, which is also known as resistance, right? So we broke above these highs over here, so we're now trading above these highs over here, meaning that price has possibility of creating a new trend back into the upside. The third thing that I did marked up was our major resistance from the daily time frame, which is this high over here. So those are the 3 things that I marked up on the daily time frame. We're gonna go down to the 4-hour time frame, make sure everything is lined up correctly. This over here doesn't matter, and then this over here is fine. All right, perfect. We're gonna go into the 1-hour time frame, and let me just wait for the 2 a.m. candle. So let me just skip this a little bit. All right, so this is 2 a.m. Okay, so this is 2 a.m. candle over here. Okay, so now that at 2 a.m. again, you guys are always gonna do your top-down analysis at 2 a.m. You guys are gonna identify your trend. So the trend from over here, obviously, we're heading to the upside. Notice how now price is coming into this area of resistance where we are kindly slowly seeing some rejection, right? So let's go down into 30 minutes to make sure everything looks good. You guys want to make sure that you guys are putting this above the candle too. Okay, so notice this right here, we have another one. So this is exactly what I'm talking about, the high risk and the high probability. So right over here, we do have a high risk resistance, which as you guys can see, price action did reject, and we also have a high probability. In this case, I was looking for a high probability. I wasn't really interested in taking a high risk sell or high risk buy because again, we're very close to 2 area of resistance. So let me explain to you guys why this is a high risk and why it's a high probability. So let me write this down first. High risk. Clone this, and we're gonna do over here high prob. High prob. Boom. Okay. So the reason why I tell you guys to mark up your high risk and your high prob is for 2 things. One, there's a possibility, there's like a 50-50 chance that your high risk setup might play out. Again, like I did show you guys, it did play out over here for 50 pips, but over here it just played out for 1%, right? So check this out. If we're taking a high risk, right, let's say that we do get our confirmation and we do enter off this weekend over here, there's a chance that price action might give us, you know, those reversal patterns and we get our entry, but there's a high chance that price action might come into this other area of resistance and reject it, and from there on take us out of stop loss and continue a new trend, right? So there's a high probability of price doing that. Again, there's another probability of price to simply just respect this area of resistance and then break above this other area of resistance and start pushing to the upside, right? So there's 2 things that can always happen. Again, I always take both setup, it doesn't matter, but what I do is always manage my risk, which if I'm taking a high risk, I'm risking 0.50% of my account balance. If I'm taking a high probability resistance or high probability trade, I'm risking 1%, right? So it's exactly why you guys are gonna mark up your high risk. Again, you can take both of them, but just minimize your risk. So this is exactly what I did. If I was looking for buys, I was looking for buys above this high probability. So this is exactly what I did on Tuesday. I was not looking for high risk. I was more interested in taking the high probability because again, we were very close to both of each other. So I'd rather wait for the high probability to break above. If the high risk was at least over here, for example, let me just delete this to show you guys an example. Okay, so if the high risk resistance was right over here, this is where you guys can take the right. This is where I'd rather take the high risk than high risk right over here. So I'd rather take the high risk resistance right over here than actually take it over here, because since we're not very close to the other side. So this could have happened. We would have entered from there, you know, enter another position from there, probably have a very tight stop loss, and then obviously risk. And there it keeps pushing to the upside, right? But that's exactly where I'd rather take my high risk. Okay, so now that we have marked up our resistance that we're interested in taking our buys in this case over here, now we're gonna go down into a lower time frame and look for our support that we're interested in taking our sell. So again, notice how the trend is heading to the upside. I'm not really interested. Let me see. Where was it that I marked up? I marked up right over here. So this is where I marked up the high risk sell, which was around, I believe it was 250. It was right here, exactly right here. I marked this up from the 15th, so yeah, this right here, this is exactly where I took the high risk, and then my high probability was right over here at the 183.084, right there. Awesome, exactly just like this. All right, so this is exactly what I did. Over here, I was not interested in taking any sell or any buy. So this over here is called my no trade zone. So over here, I did not like the structure. I was not interested in taking any sell or buy just because I did not like how the structure was. So this over here is going to call my no trade zone. Again, no trade zone. This over here is my high risk support where I was interested in taking the sell back into a downside. This over here, it was my high probability where I was interested in taking the more sell back into a downside. So Once we got that 2 a.m. candle, right, I already marked up everything. What I'm simply going to be waiting for is for, for the break under here or for the break under here to continue the sells. Again, this over here was my first take profit, which again, this is an area of resistance, which price action did break above. Most likely, if you guys are trading technical, most likely price can do this, come back, retest this zone to possibly continue back into the upside, or if we break under here, just simply wait for that to continue to sell, right? So this over here was my first take profit. My second take profit was back down over here, which is this other area of support, right? So those were my 2 take profit for that day. So now we're gonna wait for that 3 a.m. candle comes, and I'll let you guys know. So the London session just opened, and notice how I perfectly pushed into the downside, right? Now this is my no trade zone, so I did not take any sell from here, or I'm just simply waiting for a breakout, right? Now I know people might ask me, why didn't you take a sell at this area of resistance? The reason why is because it's not part of my strategy. It might be part of your strategy. You probably could have taken your sells over here, but for me, I'd rather just wait for the breakouts, right? So price came into my no trade zone over here, and this is where I'm very patient. This is exactly where I'm going to be waiting for my breakout. So let's see what happens over here. So we got the 5-minute candle. You see, this is exactly why I have it as a no trade zone, because again, we're trading between this area of resistance and we're trading between this area of support. So price action just might come here, reject it, keep pushing, and then until we get a breakout is when I'm entering a trade. So let's see what happens. All right, so we got that 5-minute candle. This is exactly the 5-minute candle that I want to see, right? So once we get that 5-minute candle, right, where was my entry? Just want to make sure my entry was at 182, 183, 152. So it was more down. So let's see what we get over here. We got a little pullback over here. This is exactly where I enter, 183, 152, right here, exactly. So I give this a little gap into the downside right here. This was my entry. My stop loss was at 30 pips. And then obviously my take profit is always going to be a 1-3 risk to reward, which was perfectly at this area of support, right? It was at this area right here. Boom. It was perfectly at my second area of target. So again, this is going to be considered as a high risk because price can literally do this. We can activate this trade, and then price might bounce off on this area of support to push into the downside, or price just might not even active, right? So this is where I enter my trade, and now we're just simply going to wait to see what happens. So as you guys can see, price action did activate my trade. We had a perfect push into a downside. Now price is at my area of high probability. What am I going to be waiting for here? Now that price has come into this area, I usually go break even whenever we hit TP2, which is 20 pips for me, right? So I go break even at 20 pips. If price action hit TP1 and reverse, for me, that is a stop loss. I do count that as a stop loss, right? But if it hits TP2, that's exactly where I go break even. But let's see what happens. So we now at this area of support where I'm either going to be waiting to see if price action does reverse and we can cut some losses, or if price action does break under and possibly enter another position, right? But let's see what happens over here. We're at this area of support. As you guys can see, price action just rejected once. We do get another candle. You see, this is exactly what I mean by that. Price action might come into this high probability and have a reverse. Me, I was just patient. I was holding this trade, but let's see what happens. We rejected the zones. Almost got stopped out with this trade too, I remember. Let me just skip this. Boom. And there you go. We're slowly having the break into a downside. Let's see what happens over here. And as you guys can see, we hit our final TP for a 1-3 risk to reward, also 100 pips. But again, guys, this is exactly what I meant of taking your trade whenever you guys are taking high risk and your high probability. This is a great example over here. We took our trade off the high risk, but notice how price came into this area of support, which is my area of high probability, right? So notice how we took the trade off the high probability trade over here. Notice how price just simply bounced off from this area of support and almost took us out as stop loss, right? So this is exactly what I mean whenever you guys need to mark up your high risk and your high probability, and you guys need to make sure to always lower your risk whenever you guys are taking high risk, and whenever you guys are taking high probability, you guys obviously want to risk your regular percentage. But this is exactly what I mean. Price can always bounce off from this area of support and always push into a downside, upside, or price can always bounce off from this area of resistance and push to a downside, right? Again, you guys got to be very careful whenever you guys are taking your high risk. Overall, this trade did play out very nice for a 1-3 risk to reward, also a 3%. But check this out. Let me delete this over here. If we would have waited to take the high probability, so this high probability happened during the New York session, right? So we got the break under where I will simply mark up over here, because again, this is something that I did explain with the candles. Now that we have formed this other support, I'd rather wait for candle to break under this area, right? So now that we have broken under this area, if we would have taken the high probability, right? So now that we came into this area of high probability, right? So let me explain. We broke under, but price action did not maintain under. It just kept pushing to the upside. Now this is an area support where we're gonna mark up. So we're gonna mark up our support over here, and we're gonna wait for the candle to fully break under. So check this out. Price action fully broke under over here. Now we're going to be waiting for the pullback, which is this pullback over here, and we're going to enter our trade under these zones over here. So again, zones, and we're going to do a 30 pip stop loss, and then obviously a 1 to 3 risk to reward. So we're going to do a 1 to 3, which is 100 pips right there. From there on, you see price would have activated that trade from there and just simply push into the downside, and then hit our final TP. Let's see if it hits our final TP with this one. Does it? No, I think from there it just reversed. But anyways, that is the examples that I'm telling you guys with the high risk and your high probability, right? So that's exactly how I do this every single day. Now, in the next part of the video is where I'm going to do this live, where I'm actually going to be trading every time. If I lose a trade, I will post it. Well, I'm going to make two parts. So if I lose a trade, I'll post that part, and if I win the trade, I'll post that part as well. So it's going to be a video. It's going to be one video with 2 parts in the video. So that's all for this video, guys. I hope you guys understand. If you guys have any question, always make sure to comment down below, and I hope you guys enjoy.